A lot of people recently have been asking me the question,
Kyron, what about your portfolio? Are you selling? Are you buying? Are you panic selling? What are you doing? What's happening?
bro, I just completely went into Bitcoin. You can't tell me right now you still hold altcoins. You need to sell your portfolio immediately. So let me just cut through the questions really quickly here because everyone is asking what I am doing simply because they are worried themselves. You're going to have all those questions, of course, answered in just a moment, but importantly, guys, you are going to know my reasoning. Now, I cannot stress it enough in this industry. If you do not know what is happening in terms of the market or in terms of your altcoin, you've got no conviction in anything, and you're just here watching the content, trying to tick off the confirmation bias checkboxes, you've learned very quickly that you're susceptible to the high emotions and likely want to panic sell, and when prices go up again, you want to hold on forever. So it is imperative you watch videos like this, not just for what I'm holding, but for the lessons learned. So with that said, let's begin. There are four main things that give me confidence in this market, being in altcoins right now, and my portfolio specifically, all right? The percentages of the coins I own and all the rest of it. The first thing is odds, okay? So let me just put it this way, guys. Right now, you should look at your portfolio and being in the market as a giant trade. If you're out in cash or in Bitcoin, whatever, it's a different story, but essentially you're looking at this right now as a time to capitalize on your financial future. That's at least the way I'm looking at it. So for me, I want to be in good odds. I don't want to be in a market where it's 50-50. You can see here, this is a risk and reward win rate cheat sheet that traders know like the back of their hands, okay? And no trader, or at least no trader I know, goes for a 1-to-1 risk and reward ratio because that means 50% of the trades they take, they don't even win. They just break even. What does that mean? Well, essentially, they just have to do a lot more of the same type of trade at this ratio in order to become profitable. So this isn't a TA masterclass, but essentially the further down you go, meaning that the less risk you're willing to put on the table, let's just say the risk here is still a 1, obviously, but in this case, we're going a 1-to-5 ratio. That means that the risk we're willing to lose, if it's $100, we're willing to lose $100 for the potential reward of, let's say, $500. Okay, but the reason most traders don't like to do this is because to find these trades, it takes quite a long time, all right? These trades don't come around very often. As you might imagine, a trade setup that offers you a 50-50 is always going to be around the corner. So that's why most traders like to be within this area. But for crypto, I do think that for the most part, we're roughly speaking a 1-to-10, okay? Or something like this, something very much so in our favor. Yes, we can definitely lose it all. All right, we may hit the casino, for example, and the casino might say, well, hey, we have a 10% chance of winning, and you have a 90% chance of winning, but of course, that chance is still there. In this case, there is a chance that the macro flips over, falls down, and crypto goes kaput like every other market. Or there is a reduction in interest rates, the Fed starts buying again, and everyone's all happy, global liquidity is going up and all the rest of it, in which crypto obviously skyrockets, and the reward is, I would even dare say, more than this. And some cases you guys are looking for a 10, 20, 30x, at least from these prices. So for some cases, it's even a 1-to-30. And I don't know a single machine or game in a casino anywhere around the world that gives you that kind of reward and risk ratio. And so that's why I'm in the market right now, is because I think even with my higher average buy-in prices, that it's just an absolute no-brainer. But the most important thing, guys, is I'm okay with the risk. I'm okay with that little bit of downside anyway. So personally speaking, psychologically for me, it's much greater, okay? And that's just simply because step number 2 here is I have a risk tolerance that when I started, and I've been making videos on this now for 3 years, I think, I have always assessed what I'm able to be comfortable with losing. First of all, and how much money I'm putting in the market, right? So essentially, if you answer this question, yes, it's a very worrying thing. Because if you've mortgaged your house, if you've, sold your car off to put every single dime of money you have into like some sort of shit coin, micro cap, meme coin, then unfortunately speaking, again, you're very, susceptible to the swings, volatility, but also because if shit hits the fan, excuse the French, you are going to be in a very tough situation. Now, for me, if everything went to zero, I can go out and find a second job. I can go out and do things. I have my whole life. I'm 25, 26 soon, ahead of me. I can afford to make these riskier bets because I'm not, 75 years old and this is my pension money I'm putting in and I've got no retirement fund. That's worrying, okay? So it's obviously depending on per person, but this is, of course, my portfolio. So this is, of course, me. And I've not really looked for high multiple coins either. I've been dollar cost averaging now for years, and that's allowed me to look for pretty much under a 10x. So my risk and reward ratio here for the multiple side of things is no more than 20%. Actually, right now, it's about 15% or so. So it's very, very good. Of course, the more multiples you look for, the more risky it becomes. Because no matter how small a coin is, or how little market cap it needs to actually go to some of those high prices, that coin has to be chosen out of a whole bunch of similar coins by the market to pump. Okay, so it's risky. I mean, if you're looking for a 40x or a 50x, you have to have everyone selling at a 10x, a 20x, a 30x, and everything in between before you get to your 40 or 50x. Now, in saying that, yes, I definitely do have altcoins that I'm going to be letting riding. Okay, coins like Ondo, I think can go over $10 still. Coins like Render, I think can definitely go over 50, 60 bucks up to, over 100 bucks even. I'm going to let some of my portfolio in these coins ride, but you also have a unique situation where, in my case, you don't have to sell the coins at like Render at 100 bucks or Ondo at $15. People just seem to not understand the idea that when you put more money in the market, that doesn't mean you still look for the high multiples. You should be bringing down your average sell prices the more money you put in, because you should just be trying to achieve a set goal. If you somehow hit that before the market's finished, okay, gamble a little bit more, but just come in with a clear goal. So in reality, I don't want to be down more than 80% in my portfolio. Right now, I'm down about 50%. I'll show you some charts in just a moment, but my life won't be over if I lost it all. It's going to suck. It's going to be absolutely crappy for a while, but it's not going to ruin my life. And that is the important part. Therefore, the way I've structured my portfolio isn't so much like this, but for the example, you want to look at the type of altcoins you're buying and separate them into risk categories. Now, the reason you do this is because anything under $1 billion market cap, in my opinion, maybe around 500 mil now because all the coins have sort of shuffled down, anything around a 500 mil market cap or under, just in your mind, don't buy that unless you're willing to lose it, because it's not an established coin, okay? Or people haven't really discovered it yet, okay? So it has that high volatility versus a coin over 500 million market cap or $1 billion market cap. These are much safer coins. So the way I've kind of diversified my own portfolio here is being mainly in this section and not much in this section. This is in market caps we're talking about here. So you can see a lot of the coins I own are in these top categories. Versus I only own a few down here, as you guys know, just because, well, it's a nice mixture, right? You have a higher reward here, but you kind of have to lean on the higher market cap coins to be a little bit safer, okay? So it also, again, works hand in hand here with the multiples you want. So again, I'm not looking for, like in the red area here, I'm not looking for more than a 15x overall, generally speaking. So I don't have to really worry about having extra risk there. The next thing here is actually waiting. And it's kind of what I was talking about in last night's video, where I am willing to wait this out. I have the patience, I have the conviction, and if you don't have patience, which mainly does come from conviction or research, you need to try to do yourself a favor and get in that position. I'm not saying have blind confidence. That's what rented conviction is. You want to have true conviction if you do believe things will get better. So for me, waiting is no problem. So this is Hedera H-bar in the previous cycle, and like I spoke about in last night's video, I mean, I can definitely see a situation like this happening again. Now, just because it's going to have to require some similar macro and specifically United States level events to cause a sudden flip in monetary policy, which again, we had the latest time back in 2020, which is COVID, right? So you can see here, H-bar was actually a sort of small to mid cap coin, 200 mil market cap over here. It fell down 73%, with this red box here showing a basically time period where most people buying before this would have been at a loss, and so breaking this meant that they will now break even again. So that's kind of took quite a while. It took 72 days. So almost 3 months, 2.5 months basically, whereas it actually took almost an entire year for H-bar to go back up to this same price again, all the way over here, and it went to eventually a 9x from that point, okay, to a 7 billion market cap. Now, if you're asking why a 200 million market cap at this sort of level here goes in a 7 billion market cap, it's just because, of course, H-bar is an inflationary token. So over the course of 12 months, tokens were unlocked, therefore artificially increasing the market cap. The next one here is Binance Smart Chain. Okay, now Binance actually was a larger coin. So this is an example of kind of, I think, a shorter time frame here. I think large caps will definitely react much sooner to any sort of change in monetary policy after something like an initial smaller recession. And you can see this actually took a little bit longer to get people back into profit again in this red box. It took 114 days. However, the overall from top to breakout point here was only 200 days. So 100 days less than HBAR, which is quite a while. It's over 3 months, okay? And it went on to 26x. So from a 4 billion market cap here, fell down to a 1.5 billion market cap at the wick, but then still went up to 26x. That's to show you guys, coins like Ondo and some of these other large caps like Render, they can hit high market caps. And just because the market cap right now is deceivingly low, that's your brain tricking you, because ultimately, these coins don't actually need 100 billion market cap to go to those levels. That is a complete fallacy in crypto. People still to this day comment on some of the videos I talk about this, and they're like, you're wrong, you're wrong. I implore you to do the math yourself. It all works on volume. And because the amount of tokens in supply times the price in aggregation amongst a whole bunch of centralized and decentralized exchanges dictates the market cap, it can be artificially pushed up. The market cap is artificial. Now, it is important because psychologically speaking, I mean, yeah, people will sell these coins at 100 billion market cap irrespective of the price. But just remember, these coins can do some insane gains from these numbers. You just have to be patient. And lastly is greed. The big boys cannot help themselves. They've gone quite heavy, as you can see here, into some of the coins that we speak about quite a lot. Ondo, right, Upbit's been buying a hell of a lot of Ondo, and also Wintermute, even one of the main players here in terms of manipulation. These guys have been buying Aerodrome. There's a whole bunch more as well. They are greedy. They want to make money. They will do whatever it takes in the right macro conditions to send us higher. So let's take a look now at my portfolio. So these coins are obviously weighted based on how much I currently own, which is obviously dependent on the market. Ondo's held up quite nicely here, so it is a large percentage, but it of course is one of the highest coins I own anyway. So it's almost 16%. We have the next highest here at ICP at 9%, near at 8.3, Render and Injective. Now, I want to note these first of all, just because you can see that it's mainly AI and real-world assets. We have AI Layer 1, AI Layer 1, we have real-world asset and soon to be real-world asset Layer 1, we have AI DePIN, and we also have AI real-world assets, DePIN, AI agents up here as well. So we have like a nice blend of the top narratives. Next, we have Aerodrome, because I think Aerodrome is a great base play. And also because base is pushing so institutionally, I think Aero is going to pick up a lot of demand, particularly being the sort of de facto DEX. It's untapped potential because there is no base token. Aether, of course, as well. We have Pith Network being at a 5% here. ASI FET, this one would have been higher percentage. I have quite a bit of money in this coin. The reason why it's not is just because it's falling down a lot right now. Okay, it's just money's being sucked out of it. We have Celestia almost under a 5%. This is hitting the modularity layer 2 area as well. A bit underwhelming right now, I must say, but I do think Celestia will be one of the top coins to explode in this time. And weirdly enough, it's always one that's very reactive when the market turns around. So that's, of course, a good sign. We have Beam. I've got quite a bit in Beam. It's my main gaming play here. It's a gaming layer 1. It would be higher percent as well, but again, this one's kind of fallen down quite a lot due to the fact that mainly it's in a very sort of, I think, underwhelming narrative right now. I mean, gaming's really suffered even more than AI coins, but also because it's a smaller market cap coin in general. Morpho's done quite well in general. This is a base lending and borrowing platform here, which I think is just going to do so well this cycle. But it's 3.5% just because it is a smaller cap coin. Mean has also fallen down quite a lot. This would have been a bit higher. We've got Plume, Wormhole, again, same story with Wormhole. Wormhole is one of the highest invested coins I actually own. But unfortunately, my cost basis is so high, my average buy price is so high, that unfortunately when the market came down even further than what my average buy price was, it's really pulled this down, but it should be higher. We have Flux, Axelot, and we have some AI plays here. So Pal, Tars, and Spectral. These three coins I kind of invested a little bit of money into right before the AI pump way back, I think, it would have been about in September, I think, last year. And obviously that AI, play didn't particularly happen. So it was always a particular position I was just, having some fun with and trying to capture some of the immediate narrative demands. But, obviously it's fizzled out. And Synesis won here. I got a little bit of money in Synesis, but high expectation of multiples. So as promised, here's the outlook on my portfolio, right? Just keeping things 100% transparent. You can see the nice grind up we had in 2024. We went sideways as the whole market and especially Bitcoin did. When Bitcoin broke out, so did my altcoin portfolio. Keep in mind, when it went up to this very quickly, mind you, it was fantastic, right? Because we weren't even in alt season yet. I mean, this was not alt season. This was no particular altcoin I owned narrative season as well. So I was like in high hopes here. I mean, this is fantastic. You want these altcoins to be at very high prices before the money's even flowed into them. I mean, how fantastic is that, right? But then, of course, we've come down. And this to me is stomachable. I'm okay with this. To be honest with you guys, I didn't actually open my portfolio up for a few weeks before I made this video. And to be honest with you, I'll be very frank, I actually wasn't as worried after seeing this. And that sounds so stupid. I know, oh my God, 50% down, not worried. But just because I know how many other people are down and what this sort of position is, generally speaking, maybe I'm on Twitter too much looking at like these degens in the Solana trenches, but I expected it to be down upwards of 60% or maybe even more than that. So this to me was a nice little surprise, I guess you could say, as crazy as that sounds. It still could move down further. I am happy, not happy, but I'm willing to accept that, of course, knowing that what comes out on the top side, as I showed you before, is likely going to be some pretty good R&R. So guys, all my positions are filled. Like I said, I'm very happy with the money I have in the market. I would be dollar cost averaging right now because if you watch this video I made a few weeks ago now, 9 days ago, my worst crypto mistake, lesson learned, I spoke about waiting for this particular moment right here to play out to where I'd actually go back into altcoins again based on a sort of new principle I've found, a new way to sort of play the markets using Bitcoin and then going into alts later on. And funnily enough, we actually are at that time right now. We're actually perfectly in that orange box. And we also are orange or yellow right here on the MVRV indicator. So this is all perfect for us to get into altcoins. But I'm not dollar cost averaging right now. The reason being is because I actually am a real person, believe it or not. I have real bills to pay for. I literally cannot put any more money in the market. That's just honestly, first and foremost, being very transparent with you guys. The second thing here is if I was to be buying altcoins right now, I would only be buying the 5 I mentioned in a few videos ago. I think it was like Chainlink, ICP, Render, Ondo, and I believe HBAR as well. Those 5 coins would be the only ones I'd have any interest in going into just to be safe. The other ones are still great, by the way. But I would actually try to be going into Bitcoin right now if I had that money. The reason being is because I would like to use Bitcoin on a mini scale for this, for right now. Essentially, what I would do is I would look to try to get a few percentage gains here from Bitcoin. So maybe even up to a 50% gain. So maybe Bitcoin going from 80K to 120K. So if I put in like 20K, getting out 30K after Bitcoin's at 120K, because I actually do believe that at that time, alts will gain confidence enough to build back up again. And if not, alts have, you know, like, again, a 2x is still put in the tank for at least me to get back to cost basis. So we have a lot of time to still go. And I think Bitcoin putting in at least a 20% gain from here would allow me to actually put more of eventually more money into alts when that does happen. So it's kind of like a mini version of this. But again, I just can't right now. Basically, it ensures safety as well as maximizing gain in altcoins if that does come. So it's a nice mixture of both. So guys, thank you so much for watching this video. I really hope you have enjoyed. If you have, let me know you have enjoyed this and love the transparency with a like down below. And make sure you subscribe. More content coming tomorrow. Take care. Bye-bye.